Retail sales showed no increase in April, despite expectations of a slight rise of 0.2 of a percentage point. While it appears that consumers took a break from spending, the data also showed that February and March's numbers were revised upward. For more analysis, let's bring in Michelle Meyer, Deputy Head of U.S. Economics at Bank of America Merrill Lynch. Hey, Michelle, welcome back.
Thank you. Good to be here.
And Michelle, your reaction to the numbers, are you surprised that at the upward revisions for February and March, which of course was when the weather was pretty cold?
Yeah, and I think what you saw when you look at the breakdown, particularly in February, is that non-store retailers did well. So I think there was a little bit of a reallocation of spend. But it was also coming off of a December and a January, which were notably soft. So I think the data was primed for some rebound, and we saw that in March. However, it looks like it was a very short-lived rebound because the April numbers have come in weak, unchanged on the headline and unchanged even when you look at the core control, which takes out autos, gasoline, and building materials, which tend to be the more volatile components.
And what do you attribute that slowdown to? Do you think April's numbers could be revised higher next month?
Anything's possible. The retail sales numbers are subject to very large revisions, as we've been learning for the past few months. So I don't have a good impression as to whether it's going to be an upward or a downward bias. But I think we should take the data as it is right now, and it's telling us that momentum into Q2 is pretty soft for the consumer. And it is a bit puzzling because we've seen a period of solid job growth. The unemployment rate has come down. Consumer confidence has improved. Gasoline prices had fallen tremendously. Yes, in the past few months they've started to edge higher, but they're still very much off the lows that we had seen last summer. So the backdrop for the consumer should be pretty attractive, but yet the consumer really hasn't shown much benefit.
Although restaurant sales rose 0.7% during the month, so it seems like some consumers are starting to actually spend that stimulus from low gas prices, right?
Well, it's hard to say. It's hard to say, where that spending is going towards, whether it's certain sectors, whether it's just being saved, whether it's being used to pay down debt. There's a lot of uncertainty. I think looking back to when gasoline prices first started falling the end of last year, you actually then saw a pretty notable increase in restaurant sales. A number of reports from fast casual dining and quick service restaurants that they were seeing a pickup in activity. And I think that could probably be attributed to the drop in gasoline prices. Consumers that are more budget constrained, that have a few extra dollars in their pocket, they're not spending on gasoline, they are going out and spending on restaurants. But I'm not sure that could be the story for today, for restaurant sales today.
Yeah, and when you look at the retailers themselves, things are not so great. Macy's this morning reported lower profits and revenues this morning. But what's your take on the state of the American consumer, especially as it relates to the Federal Reserve, which is looking for an opening to hike rates?
The way you said it was great. The Fed is looking to normalize. They're looking to adjust policy. It has to be data dependent, though, and they've made that very clear. And I would argue that the data is not cooperating with them. They started talking about the normalization process the end of last year when we were looking at GDP growth in Q3 of 5%. We were looking at payroll growth running above 300,000 and an unemployment rate that was coming down very sharply. But things have changed since then. GDP growth has slowed tremendously.
So is September still in play?
September's in play. It's data dependent. They're making it very clear that any meeting is a possibility, but they're going to react to the data. So unless the data really starts to pick up, I think it makes it hard for them to justify hiking in September. But let's see what the data does in the next few months.
All right, Michelle Meyer, thank you very much for joining us.
My pleasure.
I'm Scott Gamm, and you're watching The Street.